Hello and welcome everyone to the Almus YouTube channel. This is our Market Morning series, and I'm Swaraj, your host, filling in for Shikhar Garg. Now, we have been seeing a lot of strength in the dollar, and the dollar index has been trading well above 102. We have been seeing quite a bit of weakness in euro, British pound, and even US equities were deep in the red. Uh, JK, we have been seeing quite a bit of volatility around us. Please tell us what's going on with these currencies and the market updates you have for us.
Hello, good morning. So let's start with the stock market. We saw a good recovery in the stock market on Monday after Elon Musk's bid for Twitter was accepted, and the tech stocks rallied, Dow just rallied. But what happened yesterday was not just a reversal; it fell much more. And again, you see, this is actually a continuation of the trend in the equities, which started after Fed started the hiking and expectation of balance sheet reduction and all that. But market quoted Elon Musk again as the reason for the fall also, because they say that to fund his acquisition, he may sell some of Tesla shares. And that resulted in Tesla falling, I think, close to 12% yesterday, and then dragged down so many other tech stocks as well. So that's how the market is. But I think the bias is still to be out of equities. One of the reasons being the kind of rate hikes that the market is foreseeing by the Fed to fight inflation will ultimately result in slowdown of the economy and will affect the earnings of the company. So that's a fundamental reason. And of course, there was another reason that market looked at that Russia started saying that war is far from over, and even hinted at turning into a nuclear conflict. So that's about the market. So we had a very strong fall in the market, and now I think Nasdaq is more than 22% down from where it was at the peak, and other markets are following. China as well. Of course, China slightly recovered. China's in deep oversold territory as far as China markets are concerned. So there is scope for rebound. I have a sense that markets individually may behave according to the respective economies, because every market is quite sold off in the short term, and quite a bit of tightening by Fed is also factored in. I'm not saying the end of the bear run on the markets, but we might probably see in swings both ways. And as we head into the Fed meeting, there can be two-way volatility, as some people may look to take profit also. Now look at the dollar. We are trading at the level which we saw immediately after the pandemic at 102.5, and I think 102.90 was seen just after the pandemic. Now we are close to 102.50. If you look at the charts, this looks like a level where it can probably see some interim top. It is looking overbought. Dollar is looking overbought. Euro is looking oversold. Euro at 1.06 is not a value sell. So it's possible that even dollar index has a correction from these levels. I mean, interestingly, everyone says dollar is overvalued, a dollar has huge deficits and all that. Why people still keep buying dollars? People keep buying dollars because fundamental reason is everyone is indebted in dollars. So people, the moment there is something going on, they have to cover themselves, and the carry trade unwind, and corporates who are borrowed, all that gets some sort of stress, and that's when the US dollar gets bought, and that is what is the safe haven status of the dollar. And secondly, whatever may be the inflation, real yields, the people go by nominal yields. When the US is offering much higher yield than others, dollar tends to get be attracted. So no one is caring about the trade deficit. No one is caring about the real value of the dollar, which is definitely overvalued by many parameters. So it's the real reversal will be only when the US economy's growth is seen getting affected due to all these factors, and other countries catch up. with their inflation fighting inflation fighting tools. That's and yen in fact has been seeing conflicting views even from within Japan. Some people are saying that yen at these levels is actually hurting some of the companies, but investors in Japan, they are quite happy because they are doing the carry trade, and they would say even 135 is fine with the dollar yen. We will probably get an official reaction, or rather official action, if at all, tomorrow when Bank of Japan concludes its meeting. If there is any tweak in their policy approach that can result in yen reversing some more of its recent strength. Otherwise, we will again move towards the 130. That's how it looks like. USD CNY already moved about 4% and probably possibly headed to another 1% of gain, 6.65. I don't see much beyond that level. Sterling, for example, from 1.31 to 1.25, that's a big fall. Again, fears of recession in UK, at the same time, high inflation. So these are negatives. So all in all, good reasons why people are selling these currencies, but we are at a level where people will have to rethink whether it's worth buying dollars at these levels. So that's where we are as far as the currencies are concerned. Coming to rupee, it's been a very, very gradual move as far as the rupee is concerned. So controlled depreciation is what I would like to call it, in line with the dollar index moves. And we do have a gap between supply and demand in the local market. Demand is definitely more because of higher imports, oil companies, and we do not see, at least for now, any inflows, corporate big inflows, which used to be the order of the day whenever rupee was weak, but that is not seen now. So that gap is being supplied by RBI. So the moves are very, very controlled, but in line with the dollar index. If you look at the overall this year, in this calendar year, dollar has actually, rupee has actually weakened by about 3% and about nearly 2% since the low of March. So we are not far behind as far as the dollar index is concerned. So dollar index has gone back to the pandemic high, and then we are also near 77, which was the high seen. So rupee has also moved in line with the dollar index. Why I'm saying this is, if the dollar index does see a correction, we might see a correction in the USD INR as well. So that's, of course, we did have some yield movement also yesterday. There is the entire yield curve has shifted lower due to profit taking, and also market fearful of a future slowdown of US economy. 10-year is dealing at 2.55 and 2.75, and 2-year at 2.55. Asian currencies or weakness is led by Korean won, which is at 1261. And this is a very sensitive level where I think Korean authorities will be intervening quite heavily. In fact, one has to mention about crypto assets, which have been falling consistently during this phase of risk aversion. Bitcoin is down 20% during this period and dealing at 38,500 per unit. So that's it. So we are at a very inflection point for the dollar, and let's see how things go from these levels. Thank you.
Okay, those were quite a bit of updates, JK. And as you said, things on the war front are not getting any better. And we have been seeing quite a bit of volatility in all markets. There is a fear of recession in the European region. So, guys, make sure you manage your risk. Till then, I'll see you all tomorrow. Have a great day.